We'll be going over IRS Notice CP79A. This is an IRS notice that you might receive if the Internal Revenue Service denied a tax credit that you tried to claim and applied a 2-year ban on being able to claim one or more certain tax credits in the future. So in this video, we'll go over step by step the IRS notice. We'll talk about the tax credits that are involved. We'll talk about why the IRS has done this. And then we'll talk about what you would need to do if you want to reclaim that disallowed tax credit in the future before the ban expires. So as we normally start off, we'll take a look at the top right corner. As you can see, this is CP79A. We have done a video on CP79, which is where the IRS disallows one of the same tax credits but does not apply the 2-year ban. We'll put a link in the show notes just in case you received one or both and you want to make sure you understand what each of those notices says. The tax year, in this case, this was for the 2016 tax year. The notice date was 2017 on January 26th. As you can tell, this is probably, this is a sample that the IRS made simply because most people don't file their tax returns before the end of January. Social Security number and then a contact phone number if you wanted to call the IRS. We'll talk about your options, which are pretty limited, but if you wanted to call the IRS and get a better understanding, you can do that. In most cases, I do tell people to pay close attention to the notice date. In this case, there really isn't any requested action, so there's not the importance of the notice date isn't as clear here as it might be in another situation where you have 30 days or you have 60 days or you have 45 days to perform some sort of requested action to respond to the IRS. So in this case, it's not as important, but you should still take note of the notice date. On the left-hand side is the taxpayer information. So Eric D. Johnson, this is the address for this example. I always encourage people to keep the IRS informed of your address. So most people do that by filing their tax return when they've relocated, and the IRS will use that most recent tax return to update your record in your address in their records. However, if you have recently relocated and you know it's going to be some period of time between before your next tax return, then you may consider either calling the IRS, validating your information, and changing your address over the phone, or you can file the official change of address form with the IRS. So for individual taxpayers, that would be IRS Form 8822. For business owners, that would be IRS Form 8822-B. We'll put links to videos and articles we've created about all of the tax forms that we mentioned to include those change of address forms in our show notes. So let's take a closer look at what the IRS is trying to tell you here. So there are a couple of tax credits that are highly prone to abuse that the IRS has determined and Congress has determined needed to be protected under federal law. And most of these tax credits are considered refundable tax credits. So the first thing to understand is what a refundable tax credit is as compared to a non-refundable tax credit. So a lot of tax credits will reduce your tax bill dollar by dollar. So if you have $1,000 tax credit and your tax bill is actually $2,000, then your tax bill becomes $1,000 after applying that tax credit. So if it's a non-refundable tax credit, that means your tax credit cannot bring your tax bill below zero. So if you had $1,000 tax credit and you had a $500 tax bill, then your $1,000 tax credit could bring your tax bill down to zero, but it couldn't result in a refund. So now, depending on the type of non-refundable credit, you may have options to carry it forward, carry it back, but you can't claim a refund in a tax year where you did not pay any taxes at all. With a refundable tax credit, you can do exactly that. So if you had a $500 tax bill, but you had a $1,000 credit, you could actually apply the entire refundable credit and you would get a $500 tax refund in a year where you did not pay any taxes at all. And that is the reason why the IRS has been tasked by Congress to pay particular attention to people that are claiming these tax credits. So the ones that the IRS specifically is keeping an eye on are the Earned Income Tax Credit, the American Opportunity Tax Credit, and the Child Tax Credit or the Additional Child Tax Credit. And so the Earned Income Tax Credit is claimed on a form known as Schedule EIC. The American Opportunity Tax Credit is one of two tax credits, two education tax credits claimed on IRS Form 8863, and the Child Tax Credit and the Additional Child Tax Credit are claimed on Schedule 8812. And we'll put links to resources we've created about each of those tax forms in our show notes. So in this case, the IRS has determined that Eric Johnson claimed one or more of these, well, apparently all of these tax credits on a tax return that he was not eligible for. However, the above and beyond on that is that the IRS has also determined that the claim was due to a reckless or intentional disregard of the rules and regulations. So the IRS has very clear definition of what reckless and intentional disregard of the rules are, but basically it would be something pretty egregious. Like there is a clear difference between simply claiming a tax credit when you misunderstood whether or not you were eligible. If you claimed a tax credit but you were over the income amount, this probably would not be reckless or intentional disregard. You probably would have to go above and beyond. And the IRS does have criteria on being able to do that. They don't really publicly state the difference between reckless or intentional disregard versus, just disallowing a tax credit. So you would need to be very clear that you are entitled to take the tax credit. And if you do so in good faith, you're probably not going to get hit with a 2-year ban. You may get it disallowed. That would be fine. And there's a remedy if your tax credit is disallowed. But in this case, the IRS has determined that your claim was due to a reckless or intentional disregard of the rules. So not only is your tax credit disallowed, you can't claim any of these tax credits for the next 2 years. So the Earned Income Credit, the American Opportunity Tax Credit, the Child Tax Credit, or the Additional Child Tax Credit. So you don't need to do anything. If you claim those credits in the future or after the ban expires, you need to make sure that you're familiar with the qualifying rules, which may have changed in the future. So be sure that you're up to speed on that. And then keep a copy in your tax records. So in this case, this was disallowed for the 2016 tax year. The ban takes place for 2017, 2018, and then the next year that you would be able to claim the tax credits would be in the 2019 tax year. In the future, you would also have to include IRS Form 8862, which is information to be able to claim. I'm not going to repeat all of these tax credits, but one of those tax credits after disallowance with your tax return. So the EIC, the CTC, the ACTC, or the AOTC. So if you, and this is after the 2-year ban. So you can't file this form in this case, 2017 or 2018. You have to wait until the 2-year ban expires. Then you have to attach the IRS Form 8862 to that next tax return. And this actually says that right here. So in this case, Mr. Johnson would not be able to file IRS Form 8862 until at least 2019. But he cannot just claim those tax credits on the required form or schedule. He would have to attach IRS Form 8862 plus the required form or schedule to claim the appropriate tax credit. So when the IRS receives your Form 8862, they might send you a letter to ask for additional documentation. Don't attach the documentation to your return. They will send you a letter to request it. And then there's additional information that we may be able to find on the IRS website. I'm going to skip down here just to see if we've covered any additional bases. So that looks like everything here. These are the publications that you can look up online for each of those tax credits. So let's take a look at this CP79A notice. So again, you don't need to take any action. You can't do anything within that 2-year period, and then after the 2-year period, you would file IRS Form 8862. So you can request reconsideration of that audit. You would have to send information to the IRS showing that you're entitled to those credits, or that your claim wasn't reckless or with intentional disregard. So the last thing I'm going to point out is that this was not due to fraud. So the difference between intentional and reckless disregard and fraud is if you tried to claim, I don't know, a $10,000 tax credit, and you clearly knew that the limit of a tax credit for each year is $2,000, that might be considered reckless or intentional. But if you had a child that qualified, that's not fraud. That's simply just reckless or intentional. Fraud could be claiming a tax credit for a child that's not yours. And when I mean that, I don't mean a custody dispute where two parents that aren't in the same household are claiming the same child. The IRS would simply disallow one and allow the other. But more like if you claimed your neighbor's child as your dependent, or if you claimed your nephew as a dependent, even though that your nephew clearly has an aunt or has a mother and father that would claim that person as a dependent, and you don't even qualify. So, fraud has a different connotation in that there's a 10-year ban, plus that opens you up to criminal investigation. So there is a clear distinction between a reckless and intentional disregard versus fraud. I'm going to just take us back here. We'll wrap up the video. So again, CP Notice 79A is a little bit different from CP 79 in that there is an application of a 2-year ban as a result of an intentional or reckless disregard of IRS Treasury rules and regulations. So that is, when the IRS makes that determination, the law actually forces the IRS to place the ban on people that fall in that category. So that concludes our video. As I mentioned, we'll put links in the show notes to the articles and the videos we've created about some of these other tax forms that were mentioned here. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's another video that you'd like to see come up on the channel, please hit me up in the comments section. Thank you very much and have a great day.